traders, welcome back to my YouTube channel, IPDA Trader. Now, in today's video, I will be breaking down the two positions that I managed to catch within this POI region that netted me over 50 RR in a matter of, 20 to 21 hours. Now, I've documented every single step in this trade just so I can prove to you that I actually take those trades and that I can actually do what I say I do. So my intention with this video is to provide as much information and value to you, right? So if you manage to make it through the entire video, I can guarantee you your trading will improve tremendously, right? So with that out of the way, let's actually move on and start breaking this trade down. Okay, traders, we're back, and now we're looking at a 30-minute UJ chart, right? If you look here, you can clearly see this is a UJ 30-minute chart. This is one of my charts, as you can see my name on the top left corner, and this was published a few days ago, right? September 22. So I want to guide you through my entire thought process within taking those positions and what actually happened, right? So if we look to the bottom right corner, you will see a timer, which means this was the live market at the time, right? And this was my bias. As you see, I was expecting that we could get a move from here at least to this point. Why? Because this is the last confirmed external structure, lower high, right? Why? Because this point right here was responsible for this break. So I know with probability, if we're hitting a higher time frame order block, which is this one right here, you can actually get a move back into that supply or order block. Now, the reason why I'm picking this order block is essentially explained within my previous videos, but let me guide you through it, right? So this can be considered a origin of a swing. Why? Because this started a move that actually broke this structure point right here. So this is now a valid zone for me to look for buys. We can also see that we're engineering liquidity on the way up and grabbing it on the way down, right? We can see trendline liquidity being squeezed at this point. We can see relative equal low liquidity here. And we've also got tons of imbalance, right? So we're actually fulfilling stuff while trading into our POI. Now another thing that I can notice within price is that we've been getting compression right on the way down, which means the distance between lows have been decreasing, right, as we trade into our order block, and that's usually a pretty good sign that a reversal with proper confirmation could be on the way. So yeah, that was the first slide. As you can see, I was expecting some sort of up move from this region to at least test this region, right? So let's remove that. Let's continue to the next picture because I've got everything documented. This is actually another idea. This is not of concern. So now zooming into the lower time frame, I was seeing the initial reactions, right? I was monitoring price as it was hitting my POI, and I was expecting something like this. What I actually wanted was some sort of liquidity created, then a liquidity grab that leads into a break of market structure, so I can then safely say, hey, we've not manipulated people, we're in a point of interest, and we've broken structure up. So I'm gonna be happy to take entries somewhere right here, right? So that is what I wanted to show with this picture. Let's continue. Okay, so here's actually where I took my first entry. As you can see, this is the live market, right? On the bottom right, 30 seconds for this candle to close at the time. And another important factor is that we were approaching Asia volume time, right? This was taken during the Asian session, and at that time, I know there's plenty of volume within Asia. And what I've noticed is that mitigations that occur during high volume times usually and generally provide a bigger moves and higher probability mitigations. So that this is a pretty aggressive entry. if I'm being totally honest. But this was absolutely fine within my trading plan, right? I just used low risk because I know that this is a lower probability mitigation. However, I was fine with the risk. I saw the reward and I decided to execute on that. So let's continue. As you can see, instant reaction to the upside. We actually broke structure once again, right? If we look here, we actually broke internal structure right here, made a new high. So this was actually a great point to take another entry, right? As you can see, once we started to break up and actually move up, I decided that, hey, this order block that was left behind is actually a great opportunity to get a re-entry now that we have more confirmation, because I can agree that this first entry was pretty aggressive. However, I'm not gonna get into details on how I managed to catch that entry because that's stuff that I want to keep for my private group, which is essentially private, and I don't want to speak upon that, right? So that was that. I was actually waiting for price to come back here and continue going higher. All right, I had all the confluences, all my explanations in my head, and I was absolutely fine with taking another entry right there. So let's continue. And here, as you can see, this is where I was planning to target, right? Right at the edge of the external structure, right? I knew that with probability, we can actually get up here. Why? Because on the way up, all we have is trendline liquidity, right? All these POIs inside this region, I'm not too concerned because I know that this is liquidity. We've got imbalance here, and that with probability, hey, I want to fill this range up, and maybe once I get here, right, I want to get out of my position because I don't know what's going to happen at this point. So I actually sent this to my private group at the time, right, with entry point, stop loss, and take profit, everything there. So let's keep moving. So you can see price indeed came back down, gave me my second entry, and started pushing higher. If we keep going, you will see how price ends up going. And as we move into those higher volume times within the Asian session, well, price just explodes because you're on the right side of the market, and that's what happens, right? At this point, I was running at a 1 to 7, 1 to 8 on both positions. So yeah, it was just a matter of waiting for my target to hit. Let's continue. Let's see what we have. Price continued pushing up, and as you can see, I had all these lines where I wanted to monitor price, and if I saw something that I didn't like, I wouldn't hesitate to either trade my stop loss, close partials, or even close the entire position, right? But at this point, price was just moving up. It was going very well, so I wasn't too concerned. Let's continue. And this is the end result, right? At this point, we reach target. Now, if we look to the left-hand side, right, you can see that I've got all these lows labeled somehow. Now, I don't need to actually go ahead and label the phases and stuff because I already know that, right? Without the need of having to write it on the charts. So I was playing this was a 50-minute accumulation, and I was playing the 1-minute spring out of that 15-minute accumulation, right? That's what gave me the confidence to execute right here. I knew that we were accumulating on a higher time frame and that everything that was missing within that 15-minute accumulation was the spring. And I figured that if I can get an entry on the spring, I would probably have the higher RR in order to get to where I want to get. So yeah, I think this was the entire breakdown in regards to the pictures I have. And now we will go back on the charts and continue explaining further stuff. Okay, traders, we're back with the chart. This time you're looking at UJ again, but on the 4-hour time frame, right? And before I finish the video, I wanted to quickly give you some more information in regards to the POI selection, my trade management, and that kind of stuff, yeah? So as we can see here, right, that I collapsed both of my positions right at this point, and price just continued pushing out, right? If I would have held those two positions I would be floating close to, whoops, not this, would be floating close to 150R, combining both positions, yeah? So the reason I actually closed my positions here is the following. So we can see that this is an important structural point, right? This is a confirmed lower high at this point because this broke the structure right here. And there was a very good probability we could have just hit the block and get lower prices, especially after the mitigation play we just had at this point where we created some sort of relative equal lows. So the probability of hitting the block and dropping lower was definitely there, right? Especially if I look on the 4-hour time frame, we can pretty clearly see that we have an OB sitting right here at the edge, and we could have very well hit the block and continue dropping into this block to then continue further up, right? And I didn't want to take the risk. So I decided that, hey, I'm happy with my profits at this point. I'm going to close it. And we can also see we've got plenty of liquidity at this point, right? Got some sort of support or whatever retail uses, right? So I wanted to collapse my position there. Also, I wanted to speak upon the POI selection, right? Because I feel like the POIs that look like this, where it is just a huge wick, are the best POIs and the high probability ones, right? Especially if this POI previously mitigated another important landmark, right? As you can see, this wick right here pretty much mitigated close to the 50% of the of this origin swing. So yeah, this POI is actually pretty powerful, and it becomes valid once we get this internal break. We get internal break, we hold bearish order flow here for a second, we take out liquidity, we accumulate, and we move up. Pretty self-explanatory and easy to understand, right? Also, looking at it in hindsight, right? I could have actually noticed, and this is something that I want to keep for my private group, but I'm going to talk upon it. So we see here that the last true mitigation point is represented with this black line right here, right? This is the last point where the market makers actually got involved and started selling, right? It's continued the selling activity. So they actually mitigated a previous external landmark, added positions, and continued dropping. So looking at it in hindsight, I could have very well just held here because I know if they want to continue making money selling, they will probably not break this point right here, right? They would hit the block and continue lower. However, I was happy with the profits and I didn't feel the need to continue holding my position, right? And yeah, that was it in regards to my trade breakdown. I hope everything made sense for you. If you find it confusing, you can always rewind. You can always go back to older videos that have great information as well. So you're covered in that sense. And I will leave my Telegram username in the description. So if you want to text me, if you have any questions, feel free to text me. I will try to get back to you as soon as possible. And until next video, I wish you profitable trading. See you guys.